Hello guys, how you doing? You're welcome. So we're just gonna be having a quick video, a quick probably 10 minutes, just top-down analysis to tell you how to build a storyline and also to help you out so that you can be able to know how to take a trade. Do you get what I'm saying? All right. So let's start from, let's say, the 3-month time frame. I love starting from higher time frame because I need to be confident when taking my trade. I need to be very confident when taking my trade. Okay. Currently, currently this market on the 3 months time frame, there is the current break of structure. The reason why we use that time frame is to be able to confirm directional bias, to be sure where the market is coming from. So if the market created, this is the latest break of structure you can see here. So that means the market will return to the other block that causes break of structure so that the market will continue another downward movement again. So basically, we are expecting this move to go up here and start coming down. So are we now going to wait for long till market gets here? No. But now we already confirmed what the market is trying to do. Because after every break of structure, expect a pullback, expect a confirmation on that same time frame. Any time frame you see a break of structure, expect a pullback. There was a break of structure here, this market pulled back. Creating another break of structure is going to create a pullback. So currently it's at the pullback phase because liquidity is resting around this place here. The market needs to come and clear. All right. So that's for what we saw on the 3-month time frame. Let's go to the 1 month time frame. On the 1 month time frame, what we saw is still correct. We are still anticipating the market will actually come here. All right. So we are still anticipating the market will come to this place. When market gets here, we are good to go. So currently market has swept the liquidity around here. We are expecting a break of structure. Market should break this high above. We're expecting market to break this high. How did I know that? Expecting market to break this high. How did I know that? You could see there's something I've been singing this thing for long. When you see markets create too much accumulation at a place, then it manipulates downward, expect a distribution. If you watch my last two videos, I've talked about the same thing. Accumulation, manipulation, and distribution or expansion. So currently it's an accumulation phase. We're expecting the market to manipulate, market has manipulated downward. We're expecting an expansion upward. So the expansion will be the one that will trigger this other block. And then we'll get the sell continuation. This trade is a trade that I'm going to be trading for the next few months. Not like I will leave it for long. No, no, no. I'll just be taking my daily trade from it. You get, because I've already known where the market is coming from and where the market is going to. So that is what you need to do when you know just find one pair. Try to build the storyline, know where this market is coming from. So everything the market does, you already know where it is going to. That's it. As a trader, you need to be able to, don't be caught unaware. So now this is, let's go to the weekly time frame. In the weekly time frame, we can confirm that, okay, currently we've seen a, yes, accumulation. Market has manipulated downwards. We're expecting a distribution to the up. Because all this move that we are expecting to the up, we are looking for how to join the buys because it is buyers that will push this market to this other block that we saw in this 3 months time frame. This other block that we marked on this 3 months time frame that we are expecting market to come and make a sell continuation from there. It is buyers that we have to push the market to that place. So we have to join the buys because now we already know that, okay, buyers are going to be the ones that will move that market to that proposed direction. So what do? We look for buying opportunity. Do you get what I'm saying? We look for buying opportunity. So on the weekly time frame, what is the closest thing we can see? All right, market has broke this previous low here. Market has broke this previous low. Okay. There's no much to see here. We expect that this high should be broken because any other block you want to pick here, let's go to the daily time frame to see if we can see another block for a sell where the market might eventually want to respect. Okay, now looking from this, I've seen a very, very good trade. If you are my student, you will know what I just saw here. If you are the kind of person that use trend line, you would have seen a trend line break. So we are expecting a retest. Look at this. There's been like a trend line break around this point here. It broke. So confirming that buyers have stepped into this market. Until market gets to this place here, market will not stop. That's one thing about trend line liquidity. When you mark your trend line liquidity, until market clears the trend line finish before the market will stop. That means this move, we are expecting a move to the downward direction to trigger our order block, and then till it gets to this place, the market will not stop. This is a daily time frame. So you see how I'm building the storyline to be able to know how. And remember, this is this kind of this is the formula for my trade. I want to see a sweep of the previous low, a break of the previous high. I want to see liquidity. Then I want the market to come back and trigger my order block or Quasimodo. See that I'm using my order block for the entry, or I'm using my Quasimodo. I'm using my Quasimodo. So this is what I'm planning, which is the low that failed to hold. So this is what I will be using for my entry criteria. So you see, if you have a particular entry criteria, you find out that you will not be trading every day. What you just need to do is that you just need to wait for the market to form what you are looking for. And then, all right, let's continue. So we have seen a trend line break, confirming bias. It's not really about, I don't really trade trend line. But what we can see here is that, let me delete the trend line. I am not a price action trader. What we can see is that, let me first take this out. This market created a break here. Here's the other block that created a break here. This is it. Market has gone back to fill it. You can see, after market created this break, market went back to fill it up. Now it has created another break. Here's the other block. For this, because the other block is not there, we are going to pick the rejection block, which is the candlestick there. You can see that the market violated it. Instead of the market to start coming down from there, the market violated it. So thereby indicating a change of character around this point here. Indicating a change of character around that point. The moment you have seen that, where's the other block that led to the change of character? This is the other block. So we expect market to come and make a buy continuation from this. But this is a daily time frame. We cannot take our trade on a daily time frame. Remember, let's see. That means if you look at this, let me squeeze this chart. From the 3 months time frame that we are coming from, you can see that what we need is buyers. We need to keep buying from here till the market gets to this place here. So you could see that it's a long way. It's not until you cannot be greedy. When the market gets here, you will close your buy, wait for another buy continuation, join, wait, close, or keep your trades, or break even. Set your stop loss to the entry. Move your stop as it's creating another buy opportunity again. Enter more positions till you get here before you will close your trade. So you see how it is possible to trade only one pair, but just that a lot of people it's out of lack of knowledge. You want to trade all the Forex pairs. If they introduce new Forex pair today, you want to be the number one person to trade it. That's not how it's supposed to be done. All right, I went to the 4 hours time frame. So the lowest time frame I'm going to go is 1 hour. The lowest time frame I will be going is 1 hour. Now we can see. Now I want to be able to let me delete this. Now I already know that the market is coming down. As the market comes down, I'll be able to. But I want to I want to check my swing structure. Remember, if you go and watch my previous video, if you want to know swing structure, what I want to actually see is that I want to see a sweep of the previous low and a break of the previous high. Once I've seen a sweep of this previous low here and a break of this previous high, it has shown me my swing structure. I'll just carry my Fibonacci from this swing low to the swing high. So since I'll be buying, I'm only concerned about this discount area because I'll be buying. So any other block or any of my entry model I see around there is what I'll be taking. Please, I want you to refresh your memory with some of the videos that you have watched because it's really going to help you very, very well. All right, so here is it. Now, I can see another block around here. It is unmitigated. Oh, sorry, let me first take my Fibonacci from my swing low to my swing high. So I'm concerned about all the other block that is around here. There's another other block around here too. All right. So I now taught us one formula. I said when you now see, that means if you see this kind of other block, we need to know which one the market wants to use. All right. That is where you carry it to the nearest market structure shift. What is the nearest? Where is the nearest market structure shift? This is it here. This is the nearest market structure shift, where the market shifted to an uptrend. Let me delete this. This is the nearest market. So you just to refine your entry, you carry your Fibonacci tool from your swing low to where the market structure shift happened. So you see that we have refined it now. So that means this other block is no longer valid. It is liquidity. That means if we have placed our entry around here, it would have become liquidity. Market would have hit our stop loss. We don't understand why. So what we now need to do is that we delete this one. And then we are looking for other blocks around this this discount area. So that means it's from year to year that we are concerned about every of the entry model we see here. So now, not to miss this trade, because every trade will be taken, our stop loss must be at our swing low area. I'll prefer to take this, what's the name? This Quasimodo. This Quasimodo. Why? Let me take you to the 1 hour time frame. Taking you to the 1 hour time frame, I want you to be able to check. Okay, let's go to the 12. I want to see very, very perfect. All right, exactly. So you can see on the 2 hours time frame, you're already seeing what we're trying to look, which is this. So if eventually the market decides to respect the other block, we are still in the trade because why? The other block still falls within our entry conditions and everything. So that means everything that happened here is liquidity. That means everything that happened here is liquidity. So what we just expect market to come here and then we'll take our buy. All right. Now I can decide, let's even use the other block. Let's use the other block because I want the trade to be a sniper trade. Since this Quasimodo almost mitigated this liquidity almost mitigated this our Quasimodo, let's use another block because why? We expect market to come and clear this liquidity, respect our other block and start going up. So this is our target. This place here is our target. All right. That's our target. So what do? We play the chart. All right. You can see clearly the market respected it. Even if we have used this Quasimodo, we'll still be in the trade. We'll still be in the trade. Do you get what I'm saying? So this is a very, very good thing. You can see a very, very clear buy. Your stop loss will be just below the swing low and then target your swing high. Target your swing high. Wow. You can see, for those of you that are always this, you can be able to enter another entry around here. So people will be shocked that in one trade, me, I can be able to make a lot of money. It's because I was able to know where to enter. You can see another other block around there, which led to a break of structure. And also, it came to engineer liquidity around here. So since this is my ultimate target, my target for now in this internal structure, since this is my target, I'll just have to add more position around this point here. And this position that I'm adding, I will be using a tight stop loss and join the buy to the up. So you see, these are to add positions. So this one that entered first will still be running, while this one will be like an added position. But it will not be like the same lot size. Remember, this is one mistake a lot of people make. So you can see, that's how we're able to add two positions on one trade. Okay, let me see. I think giving us opportunity to add one more position. But while you're adding position, you would have already set PE. You already set break even for many of the trade that you entered. I don't know. I see like a rejection block around there. That's only if this market will come back to this place. This market comes back to this place, I'll add more position. That's the condition. Oh, it did not tap it. But then market has hit our full TP. A lot of you will not be patient to wait for this trade to play out. But the market has already hit the full TP. Has already hit the full TP. So now, here's the thing. Remember what I said? I said we are building a storyline. We want this market. The market is coming to this extreme POI that is at this up here. All right. So let me take back to the daily time frame to see what this market is doing and to see what next we can do. So on the daily time frame, you can see that on the daily time frame, there's been a daily time frame change of character here. So what is the next thing we can do? The market is going to be making a buy continuation from those 4-hour order block that I marked the other time. But for this, I'm not going to enter immediately. I'm going to wait for a confirmation. I'm going to wait for a confirmation. If the market makes a confirmation there, okay, let me go to maybe like a 1 hour time frame. I see maybe there has been maybe like a change of character. Okay, I think something like that happened. There's been like a change of character. Like I decided to say I want to enter a 1 to 3 ways to reward trade here. I don't know, maybe this thing will go to 30 minutes. All right, let's see. Because there's been like, this place will serve as our liquidity. Is our liquidity. I think it has already triggered the other block safe. So you see that even before it happened, I had already pictured what would have happened there. Did it trigger the other block at all? I'm coming. Let me see. Oh, I think we lost that one. All right. Let me see. Uh, Please, if you are still watching, I want you to write in the comment section what made me lose that trade. What's happened? Why we lost that trade? All right. Judging from the storyline that we have built so far, this is like scalping. And look at how this trade that I just went to carry, look at how small it looks on the 4 hours time frame. That's why I'm not a scalper. Anytime I try scalping, I will want to be using the formula I use for swing trade to use for scalping. Eventually, I end up losing the trade. That's why you need to find out what kind of trade suits you well so that you will know what kind of, okay, looking from this, there's been like a trend line and there's like a trend line break. Market has broken out from this trend line. Until market gets to this place here, I'm not sure market will stop. So there's an high chance that market might resume selling from this place here. I don't know. So, okay. Let's see if there's going to be like a change of character to the downward direction. All right. Remember, see, this thing, when you find your directional bias, me, I don't like scalping. These two buys that I've picked from this place is enough. But exactly what I'm saying, everything this market is doing, this market is trying to come back to this monthly order block that I marked there. This other block that I marked here, remember I drew this line. Go and watch from the start of this video. I drew this line that this line market has formed an accumulation phase. Oh, see, you need to understand this. I said market has accumulated here. There's something we call AMD. AMD. The A stands for accumulation, the M stands for manipulation, and D stands for distribution. So you can see that all the two bars that I picked, they were just small move in the monthly time frame. The market, this place the market range there forming an accumulation phase. Then the market manipulated to the down. I'm expecting a distribution to the up that will clear this line that I drew here. This line is like my change of character to the up, or will serve as liquidity for this other block here. So I'm expecting market to come and clear it. So we are still expecting more buys that will come and take it out. Do you get what I'm saying? So we expect more buys to come and take it out. That is just the power of this information when you're able to get the right information. So that means we are expecting market to come and take out this eye here, this eye around here. We're expecting market to take it out. Sorry, this eye here. We're expecting market to take it out. So what do we do is that we look for buying opportunities to join. Now, the same thing I've always been preaching about, it has happened here. I've seen it again. So that's my criteria for joining this trade. If this market decides to come like this market has formed this thing, a higher low, swept this low and broke this high. What will make me take this buy is if this market comes to this place, I'm going to take another buy. Do you get what I'm saying? That's my criteria. I don't jump on trade. You could see how the market is running. Oh my God. See how the market is running, seeking to take out this high. So, wow, the mistake we made is that this our buy that we entered from here. Since we know that that's where the market is going, we will not have closed the buy. Do you get what I'm saying? You will leave the buy till it gets to that place. That's how a lot of people catch more than 1,000 pips. Till it gets to that place. You ask, how did you know that this thing will happen? How did you know that this thing will happen? That's when you do top-down analysis. With top-down analysis, you can be able to catch a lot of trade. Let's take it to the daily time frame so that we just move because the video is getting too long. I don't want it to get too long. So remember this thing we do. We want the market to take out this line. Imagine, almost. You just almost see how your stop loss tight. See this kind of big trade you catch. God. See, ah, this is how many pips? This is 924 pips. 924 pips. If you risk $10 on this trade, like you want to lose $10 on this trade, you'll be making $924. If you risk $10 on this trade, am I right? If you risk $1,000 on this trade, like you risk 1,000, if your stop loss is $1,000, then you should be making $9,000. I don't know, maybe I'm right. Please just correct me. My head is too heavy this morning. Wow, wow, wow. Did you see what we actually did from the monthly time frame? We were able to build a storyline. We already knew that after market has created an accumulation phase, it manipulated to the downward. We are expecting a distribution. How did you know that there was going to be a distribution? Because why? From our 3 months time frame, let me take you to the 3 months time frame. Now I'm taking you back to storyline. The video is already completed. We saw a break of structure here. We now mark the other block that led to the break of structure, and we know that market is going to return back to the other block so that there's going to be a sell continuation downwards. While we are waiting for that, what are the things we saw again? We saw an accumulation. We now went to the monthly time frame where we now saw what we call the power of three. We saw markets accumulated, manipulated downward. The next thing we're expecting is distribution because we need buyers to push the market to this other block so that sellers can take charge. But while we are there, we have to mark this eye here because this eye is something the market is going to take out, which will eventually serve as our liquidity. And when market takes it out, it's a clear sign that the market is going to be going up. And the market eventually did exactly like that. So imagine how many pips we caught. We caught more than 1,000 pips. Remember, we took a first entry on the 4-hour time frame. We took a first entry. The first entry we took from here, our first entry was from here. Before we joined the second entry from here, imagine how much we would have caught. This is a trade. You don't even need to trade throughout the month. You just leave the trade, let it run. Oh my God. So this is the end of this video. Please, I want you to do top-down analysis, build storyline, add it to some of the things that you have learned, and improve your knowledge in this thing. It's really going to help you. So I look forward to seeing you guys doing well in your trading. All right.